sum is in front of us. From the following balance sheets of X Limited, prepare cash flow statement for the year ending 31st of March 2019. The balance sheet is given, notes to accounts has been given to us, and then it is about the additional information, right? A piece of machinery costing rupees 70,000, on which accumulated depreciation was 25,000, was sold for 20,000. Okay, so let us have this working. Cost price of the machine sold can be seen as 70,000. Okay, on which accumulated depreciation can be seen as 25,000. We need to deduct that, and then we need to have the book value. 70 minus 25 is 45,000. Has been sold for 20,000. Okay, so this 20,000 is already there with us, and let us then have a profit or loss. Book value 45, sold for 20. It's a loss of 25,000. What are the effects in the machinery account? You can see that I have already mentioned these three details over here. As on the date of sale, I need to mention by bank, by statement of P&L, and by accumulated depreciation, right, in machinery account on the credit side. So let us finish out that part. By bank with the selling price, that's 20,000, right? By profit and loss account, we can see that the losses amount 25,000, and then we have accumulated depreciation, that is also 25,000. Now the second effect of these three, by bank, this shows the sale of asset. When you talk about the sale of asset, that has to go to investing activity, and I'll be adding it over there, right? Add there, sale of machinery, right? Sale of machinery can be seen as, what was the selling price? 20,000. Okay. After that, next is statement of P&L, the amount of loss. We all know that the amount of loss has to go to adjustment and add over there loss on sale of machinery, right? Loss on sale of machinery amounts to rupees 25,000. Correct? Loss was 25. Okay. And then the third amount is accumulated depreciation. Okay, so we know like this accumulated depreciation has to come to provision for depreciation account or accumulated depreciation account, and let us put it over there, amount of 25,000, right? We should not forget to give the second effect of all the three amounts, right? One by one. Sale has to go to investing, loss has to go to adjustments, and accumulated depreciation has to go, come to accumulated depreciation account on the debit side. So we are done with this particular part. The second adjustment is regarding the interest paid. The total interest paid during the year is 9,000. Interest paid is a loss for us, and being a loss, it has to go to adjustments again, has to be added over there. I'll put it over there as interest paid, right? Amount is 9,000. When you talk about interest paid, yes, interest has to come to financing activity and by way of deduction, because interest is always on the borrowings, right? Short-term borrowing, long-term borrowing, everything. So interest paid, this amount has to be negative. So amount paid is 9,000, right? So basically we are done with the two adjustments. One was about the sale of machinery along with the accumulated depreciation, and we were given the balance of accumulated depreciation and all, and that's why like I have done so. And second is interest paid, right? So we are done with the two adjustments. Once we are done with the two adjustments, let us close this and get the difference. For difference also, I already mentioned bank over here. Let us get the total on the credit side. This is 540 plus 70. This will be 6,10,000. Okay. Now the difference over here, 4 lakh and 6 lakh 10, that's 2,10,000. Okay. The 2,10,000 is a purchase of machinery. This purchase of machinery has to go to investing activity by way of outflow, right? I shall put it over here, investing less purchase of machinery. Amount is negative. Purchase was rupees 2,10,000, right? If I'm not wrong, yeah, 2,10,000. Okay. So we are done with machinery account. Now let us close this provision for depreciation account. Total on the debit side is 1,10,000 plus 25. That's 1,35,000. Okay, so I should put 135 over here. And the difference now, 135 and 75, difference is 60,000. This shows the depreciation provided during the year. The depreciation provided during the year has to go to adjustments, has to be added because it's an expense again, loss again. So depreciation on machinery. And the amount, depreciation amount was 60,000. Okay, so we are done with the three things. Adjustments over here. We are done with the ledger accounts also. Continuing further now with the balance sheet. Share capital can be seen. Share capital is 3 lakh to 4 lakh. Okay, so increase in share capital. So issue of share capital has to be added in financing. Let me come to financing activity right here. Issue of share capital. Right? Issue of share capital. Okay. So the amount is 1 lakh rupees. Issue was 1 lakh. Next is reserves and surplus. When you talk about reserves and surplus, okay, and there is no notes to accounts, so by default we need to assume this as the balance of statement of P&L. So let us go there and write there the difference. We know that it has to be closing minus opening. So I'm putting it over here, closing minus opening, that will be 50,000, right? You can't write it as reserves created or reserves utilized, nothing like that. Because we don't have any other information, so that is assumed that this is a balance of statement of P&L, right? Okay. After that, we have long-term borrowings, note number 1. Amount, we can see that there is no change at all. Let us go to note number 1 and see what is there. It's 1 lakh and 1 lakh. It is a bank loan. Okay. For the first time, you can see that there is no rate of interest mentioned. Right? Even if rate of interest was there, we could not have calculated the interest. The reason is very clear, because in adjustments, we are already given that total interest paid. When you talk about total interest paid will be on the short-term borrowings as well as on long-term borrowings, right? Okay, continuing further, after long-term borrowings, we have long-term provisions. Okay, the long-term provisions, we can see that I already marked with red over here. Provision for depreciation, though like we are done with this account, but please remember that it is not necessary that this account appears by way of deduction under the fixed assets. No, this can appear as long-term provisions, provision for depreciation, right? Please take care of this. Next is trade payables, current liabilities. Whenever current liability comes, so we should think over changes in working capital. Trade payables, we can see that it was 2,80,000 earlier and now it is 1,70,000. Liability has reduced. When liability reduces, we all know that the amount must have been paid, so it has to be deducted, right? Trade payables, right? Trade payables, kitna reduce ho raha hai? 280 to 170, that's 1,10,000, right? 1,10,000. Okay. Next is other current liabilities. Note number 3. Let us go to note number 3. Okay, so this is unclaimed dividend. Unclaimed dividend always play a very, very important role. You can see that last year amount was 20, now it is 30. Unclaimed dividend has increased, right? That means the company is ready to pay, but from the other side, the amount of the dividend has not been claimed. So what are the amount of dividend that we are going to pay? So let us focus on this contingent liability, okay, because these two are interconnected. Proposed dividend has been given as a part of the contingent liability. Opening was 40, closing is 50, right? 40 and 50. We know like the opening balance has to be taken care of. So 40,000 is a dividend to be paid, but we know that like unclaimed dividend has increased from 20 to 10. मतलब ये है कि like 10,000 dividend हमने pay नहीं किया. So we have to show that working. Let us come to financing activity and put it over there as dividend paid. Right? Dividend paid. Amount is 40,000, right? Less the amount of unpaid dividend, that is 10,000, right? So let us close this. The actual amount paid by us is 30,000. Dividend paid and made has to be same. So we have to go to the dirt wala place and write over there dividend proposed. Okay. Yeah. Dividend proposed. Amount over here will be 40,000, not 30,000. Please take care, because we are making a provision of the total amount but not paying because the other side the shareholders have not claimed. Okay, so after other current liability, note number 3, we have to go to provision, short-term provision, note number 4. Short-term provision, again we can see that it's provision for tax. Provision for tax is 25 and 40. I have told you again and again, this is just one account for which we never find the difference. Opening has to be paid, closing has to be made. So opening 25,000 has to be paid. The tax is paid during the year. Operating fourth part over here. Yes, we have to deduct this. Amount is 25,000. And closing has to be made 40,000. Dividend has to be made. So let us go to that column, right? And write over there tax provision. Tax provision amount is, which was the amount provision for tax, 40,000, right? Okay, after provision for tax, short-term provisions, we can see that tangible assets have been given to us. Okay, so we are done with that part also, right? Machinery account was prepared. After that, current assets. Current assets again, working capital. Inventories, we can see there. Inventories, it is 180 and 2 lakh. Okay, that means inventories has increased. If asset increases, that means it's outflow of cash. So let us come to working capital part. Right over there, inventories, right? How much? 20,000. Okay. Trade receivables, note number 5. Let us go to note number 5 and we can see over there two amounts are given, debtors and bill receivable. So we need to give the effect individually. Debtors, earlier it was 2 lakh and now it is 1,50,000, right? So debtors have decreased, asset decreased, that means it's inflow of cash. So working capital to be added, trade receivables, and the amount we can see over there is 50,000. Bills receivable has also decreased from 1 lakh to 80,000, right? If bill receivable has decreased, again it indicates that the cash has been received. So the same place again, working capital to be added, bills receivable amount is 20,000. Okay, so we are done with trade receivables also, and finally we have cash and cash equivalents. Opening and closing is given 20 and 30. So let us put it over there. Opening cash and cash equivalents is 20,000 and closing is 30,000, right? This can be seen as the total over here 50, 40, 40, that will be 1,30,000. Over here all the amounts are to be added. Okay, so 25, 34, 94. So 94 plus 130. Okay, that will be 2,24,000 if I'm not wrong. Okay, now the amounts to be added and deducted over here. 130 minus 70, it's negative 60,000, right? So 224 minus 60. 224 minus 60 will be 164, right? Now out of 164, if I deduct 25,000, that will be 1,39,000. Okay, the 139,000 is cash flow from operating activity. Okay, next is the investing activity. 210,000 is negative, 20 is positive. So the final amount has to be negative. It has to be 1,90,000. 1,90,000 is negative, so cash used over here. I'm sure like we are used to this now. And now financing activity, 1 lakh minus 39, that's 61,000. Okay, so let us get this A plus B plus C. This is 139 over here and 61 over here. 139 and 61 comes to 2 lakh. 2 lakh minus 1 lakh 90. Okay, so that's 10,000. So 10 plus 20 is 30. So we are done with the sum. So this is the sum in front of us. From the following balance sheet of Kent Limited, prepare the cash flow statement. Balance sheet has been given to us. After the balance sheet, there are some notes to accounts, and then we have some additional information also. Let us start with the additional information. First adjustment, we can see that it's dividend paid during the year is rupees 46,000. Dividend paid 46,000.
सर ऊपर जाएगा सर ऑपरेटिंग में
dirt में, right over here, first part. Okay, dividend paid. Give me the second effect, please. Amount was 46,000. Okay, this is one effect. Second effect is in financing.
Financing.
We will deduct.
Financing.
Right, we'll deduct. Dividend paid. Okay. So let me. Okay, this is negative 46,000. Next one is depreciation on machinery. Written off was 28,000. Depreciation written off. Okay, so we need to check whether only machinery is there, or along with that machinery we have accumulated depreciation also. But I can see yes, machinery is there, and we don't have any provision for depreciation account. This shows the machinery is prepared at its book value, not cost price.
सर depreciation 28,000 सर adjustments में.
Yes, I will add over there. Okay, depreciation on machinery. Yes, amount was 28,000, right? And this second effect of this.
सर लेजर प्रिपेयर करेंगे.
Yes, we have machinery account with us, wherein like I have already recorded the opening and the closing balance. Opening is 2 lakh, closing is 238. Depreciation, we can see that it is always credited in the account. So 28,000 will be credited over here.
Yes sir.
Okay, so get me the total please of this account on the credit side.
2,66,000.
Okay,
2,66,000.
266 is right. And now get me the difference please.
66,000.
66,000. Okay, so this is going to be the purchase from machinery, right? The second effect of purchase.
Sir less in investing.
Okay, investing activity will deduct this. That's correct. Purchase of machinery, right? Okay, amount is 66,000, right? Okay, after that, third adjustment. Okay, this is really very important because of see like what happens because of just one adjustment we need to do the sum. We can see that the provision for taxation was made as rupees 66,000. Whenever we have this adjustment, provision for tax, we should think over the paid and the made part, right? But over here, provision for tax was made as rupees 66,000. Okay, so again, we need to prepare a ledger account for this. I have done that. I have to copy the opening and the closing. We can see that it's 60,000 and 70,000. So 60 is opening balance over here and closing 70 over here. Okay, we are done with that. Now provision for taxes made. Provision is a charge against profit. Do you remember that?
Yes sir.
Okay. Being a charge against profit, it has to be debited to P&L. Correct? So the entry is statement of P&L account debited to provision for tax. Any provision, whenever you make any provision, right? Statement of P&L has to be debited, right? When you think from company's point of view. If it is sole proprietor or partnership, profit and loss account, right? So statement of P&L debit to provision for tax. Amount is 66,000, correct? So let us see this account. I have written over here, this is made part, right? So provision for tax has been made. So I need to credit over here. Amount is 66,000, correct? And whenever you make a provision, as I told you, it's a charge against profit, and profit part has to come to statement of P&L over here. So I shall write in the first part, provision for X, right? 66,000. Yes, clear? Okay, we are done with this adjustment. So let us close this provision for tax account also, right? We can see that in provision for tax account on the credit side, the total now will be 1,26,000. Okay, so this 126 has to come to the debit side also. Can you tell me the difference, please?
56,000.
56,000. So this is taxes paid during the year. Second effect of this amount, 56,000.
Sir, less tax paid
Taxes
in
paid.
operating.
Operating mein fourth part, right? That's very correct. Well, let me put it over here, 56,000 as taxes paid, correct? And this has to be negative. Okay, so we are done with the three adjustments. We continue with the balance sheet now. In the balance sheet, we can see the first amount as share capital. Opening balance can be seen as 3 lakh and closing balance can be seen as 4 lakh. It's an increase in share capital. Increase in share capital is basically the issue of shares. Issue of share capital will have to go to financing activity and will be added over there, right? Issue of share capital, right? And this will be added because the funds comes in. Okay, so that is amount of rupees 1 lakh rupees, correct? Next is reserves and surplus. Note number 1 can be seen. Note number 1. Let us go to note number 1. We can see that it is reserves and surplus and statement of P&L. Both the balances are there. Reserve and surplus, it was 1 lakh and now it is 1 lakh 20. Reserves have increased, so it has to be added. Where? The dirt wala part. Okay, so let us go to dirt part and right over there, reserves created. Amount 20,000. After that, statement of P&L, closing minus opening. So 61,200 minus 61,000. That will be 200 rupees. So we are done with reserves and surplus also. Long-term borrowings, note number 2. Let us go to note number 2. You can see that over here, the amount is 1 lakh 40 and 1 lakh 40. There is no change in the amount. But again, that rate, you can see that I've already marked with red over there. Okay, so 12%. The 12% has to be calculated on opening balance. So 1 lakh 40,000 ka 12%. Okay, so that will come to I think 16,800. Okay, so interest on long-term borrowings, interest on bank loan, it has to be shown by way of deduction in financing, interest on bank loan, right? Amount is 16,800, correct? And the same amount, okay, we know like it's an expense for us. So being an expense, it has to be added in adjustments. Let me put it over there. Adjustments, add over there, interest on bank loan, 16,800. Okay, we are done with the two effects of interest on bank loan, right? Because there is no change in the amount, nothing to do with the bank loan, but interest is always important. Okay, current liabilities, trade payables, note number 3. Let us go to note number 3. Trade payables, we can see both creditors and bills payable, both amounts are given. 2 lakh 80 to 1 lakh 20 is the creditors. Creditors have reduced, liability reduces. When liability reduces, that means we have paid creditors. It is outflow. So in working capital, I'll be showing it as outflow, creditors, right? Okay. And amount 280 to 120, that's 160,000. Bills payable also has decreased from 20,000 to 10,400, right? So difference will be 9,600. So we have paid bills payable also, correct? I shall deduct over here 9,600. That's fine with me, and I'm sure like everybody has understood this part. Whenever trade payables, individually creditors and bills payable are given, so we need to put the effect like this only. Okay. After trade payables, it's short-term provisions, note number 4. The note number 4 can be seen for provision for tax, and we are done with the ledger account of the same. Okay. After short-term provisions, the next amount can be seen for fixed assets, tangible. Note number 5. Let us go to note number 5 and check. Okay, machinery is there. Machinery we are done with. You have business premises also. Now, business premises can be seen as opening balance is 4 lakh rupees and the closing balance is 3 lakh 80,000, right? 4 lakh to 3 lakh 80. Business premises has reduced. So can you tell me what is the assumption over here? Anybody? Fixed assets reduces?
Depreciation.
Okay, I have told you earlier also, if asset has to be sold, the adjustment has to be there. But if there is no information, that means the reduction in any Tangible fixed asset will be taken as depreciation. Depreciation, we know it's a loss. The loss has to be added over here in the adjustment part. Let me put it over there. Depreciation on business premises. Right? Amount will be 20,000. Okay, so we are done with the fixed assets, tangible. Now after that we have current assets, inventories. Inventories, we can see that it was 160 and now it is 128,400. So it has decreased. Any asset decreases, that shows cash inflow. And being a current asset, working capital. So tell me the difference, please. Till the time I write over here.
31,600.
31,600. Okay. Inventories. 31,600. Okay. Done. After inventories, trade receivables has increased from 2 lakh to 148. Again, asset decreases, its inflow. Same place. After inventories, I shall put it over there. Okay. Over here, trade receivables. Right. Amount is 52,000. Okay. Finally, we have cash and cash equivalents. Opening balance can be seen as 1,000 and closing 27,200. Let us put these two values over here. Opening is 1,000 and closing is 27,200. So that's all. Let us get the totals. Be quick enough.
132,200.
132,200. Okay. Thank you. And is
64,800.
64,800. Okay. Total of these two. 196. 197.
197.
Okay. Over here, I want you to add and deduct these amounts.
86,000 minus.
86,000. Okay. Yes, cash generated from operations. 197 minus 86. 111.
111.
111 minus 56.
55.
55. That's correct. Okay, so this is the first amount from operating activity, positive है, इसलिए cash flow from. Second is investing activity. We have just one amount, negative, so it is cash used amount. I can see that that's 66,000, right? Okay. Third one now, from financing activity, 1 lakh and 62,800. I think like that should be
37,200.
Okay. Now tell me A plus B plus C. 55 plus 37,200.
26,200.
26,200.
Okay, that's fine. The 26,200 plus 1,000 will give us 27,200. That's fine, absolutely fine. So we are done with the sum.